FYI, I am bringing the candy machine to the office. I cannot have it at home. You can put vitamins in there if you want, but I'm going to bring the candy machine to the office. I got the stand, you can put it on there. And then I need somebody to take the key, because at home, I take the key and I unscrew the top, just scoop my hand in there. I need 1 quarter at a time, man. That's how it's got to go. Hey, welcome to the Closing Beat, everybody. Happy Monday. How we doing out there? Probably not too bad, right? Considering how the markets behave today. We are financial advisors here at Jazz Wealth Managers, and I hope you'll check us out at our website. If you've never heard of working with a financial advisor before, you're not going to find that we're like the rest of them, I can tell you that. We like to keep things pretty laid back, pretty simple, talk to you like you're a human being and not try to impress you there. We like to impress you with what we offer, not with what we wear. So this is just one way that we do it. We'll come to you and kind of talk every day about the stock market. We're not active traders here. We just like to talk about what's going on in the market, share some data with you, and hopefully teach you something as well, because we're really big on education here. Our Wine and Wealth this week, every week we do a class for clients. We call it Wine and Wealth, just another way to lay back, learn something new. And I'm going to teach you some data this week. You are going to see some data like you've never seen some data before. We're going to go through every single bear market. We're going to give you every stat on the bear market. How far along were we? When did the market bounce? What was the worst drawdown? How long did it take? How long until it finished? What was all that data? And I'm going to put it real simple so you can see it. And then like we did a little bit in our Notes from Jazz email this weekend. So we come to you twice a week. Once is a Wine and Wealth, a class. The other is an email that goes out on Sundays. We're going to talk about which markets are most correlated to this current one. Some really geeky stuff. So I hope you're ready for it. You will need a drink because it's going to be a little bit different than we've done in the past. Because we almost had a bear market the other day for just a second, ever so slightly. And there's a lot of things to talk about there. Also, free for everybody on our YouTube channel, 1 o'clock every day, we have the FinTips videos. This week, we are focused on inherited IRAs. Been getting a million questions on inherited IRAs. There's a lot of little stupid tricks with these inherited IRAs. So all week, every video at 1 o'clock will be focused on that. Eric's going to do a few. I'm going to do a few. And you'll get a little bit of, view from different sides on how you can handle things there, because there's a lot of really cool tricks that you can use. And I hope none of you ever inherit an IRA, because that's never good news, but we want to work with it and, obviously help you out as much as we can. And all we ask for is a subscribe, a like, a thumbs up, a little bit like that, whatever you can do, leave a comment. Anyways, on to the stock market. Off to the right-hand side of your page today, you see pretty strong gains, I had some M&A news earlier this morning with Broadcom and VMware. You got President Biden looking to raise some of the China tariffs I don't know. And then you've got an oversold market, right? We look at the stock market here today. Very quick recovery rally. However, we've seen this before. We are a scorned person, right? We know that this thing can giveth and then immediately taketh. So for now, what you have is a no real news rally. So it's just an oversold bear market bounce. And, we use that term loosely there. So it's welcome. Nobody's arguing that. We'll use the same resistance area that we talked about before. Technical traders will like to look right up in there. So if you're following just over the next couple days and weeks, that's going to be your trouble spot like we saw before a little bit. So that's what you have there. If you're looking inside the S&P today, like I mentioned in the title, tech and financials help lead the way today. Apple finally got its bounce, an impressive bounce there with Apple. Microsoft, no stranger to that either, up 3.2% on the day. Your big names, the big market movers, those were the ones that did the trick today. You've got Alphabet with about a 2% gain there. Working on to some of the smaller ones, even NVIDIA attempted a bounce. Tesla attempted a little bounce. These are all very highly oversold stocks at the moment. But then you move on to financials, and, you just kind of pick one. Visa, up 4% on the day. Just stick with that. MasterCard, 3.6%. Berkshire Hathaway, doesn't matter how you want to look at it. Bouncing off support there, nice and strong. JP Morgan was really what kicked things off with some of their bullish comments today. So up 6% on the day. That puts Bank of America higher by 6%, Citigroup higher by 6%. You get what I'm saying? Right? Just moving higher there in financials. If you don't like going through stocks, you can look at the XLF. That is a sector-based ETF. So this tracks or is invested in the JP Morgans, Bank of America's, Wells Fargo, Citigroup, the big bank stocks there. If you like the regional banks, that's KRE, not as much of a bounce today, but these would be your smaller names that fall into that category. Think State Street, Truist. They're not the big guys, but they're nothing to laugh at either. So that's what you have going on over in the S&P. I'll mention real quick, value hunters were out there a bit today as well. Large cap value, 1.8% gain on the day. Large cap growth, only 2%. So the action was not just in the big cap, super duper large stocks. Don't let me mislead you there. And also small cap value outpaced small cap growth. So a lot of the value hunters were still out there, and just that the headlines are going to be these big tech names there. Now, as far as the S&P goes, I will go, I'm going to use the SPY, so y'all can see this here. What we have is a gap higher. So we close down here, we gap up to start the day. If you're not familiar with candlesticks, go in the dojo and just search candlesticks. We've got 3 classes to illustrate what all this gobbledygook means to catch you up to speed there. But today was the largest upside gap that we've seen all year, coming from being down, I should say. Let's put a little more criteria on that. So the largest upside gap reversal be how you would say that. It's good news, but like I said, there was no news to get us going there. It was just people got excited to get the day started, or to get the week started. If we go on over to the NASDAQ, well, that's the worst year to date. It's down about 26%, but it was worse on Friday, so it's getting better. I don't know if you like that sort of thing. Again, it was tech-related today, which is why you see that on the screen. You got the Dow up 2%, and that is your best performing index so far this year. It's down 12%, but that's still half as bad as the NASDAQ. So not too bad there. If you look through the Dow just a little bit here today, there was really only 3 stocks lower. Dow Chemicals, which is quite strong in its own right there. Home Depot, which is still battling off some of the earnings report there. And Honeywell. Those were the only 3 stocks that were lower on the day. Other than that, it's going to be financial related. JP Morgan, of course, Visa, names we already talked about. I'll throw in American Express there as well. Otherwise, pretty weak stocks. Just had a really good rally today. Looking elsewhere around the market, the Russell. Like I said, small cap value was the area today, so that even beat out the Russell Index, or what you would call your core investing. So very impressive there. Maybe a higher low? I don't know. We'll see. The good news is gas prices didn't take off again because oil basically stayed flat. Ridiculous, right? I was just joking with everybody here. $78 to put gas to fill up the tank. I'm dumbfounded by that. So I finally noticed that, and I know everybody else has been saying, well, these gas prices are crazy. I don't drive a lot, you know what I mean? I just kind of work. So that was the first time I got hit with that, and I'm like, got to do something about this. Anyways, with that, you got volatility moving a little bit lower, but volatility obviously hasn't cracked in any way. You need more of a sustainable rally there to get that going. And bond prices headed a little bit lower means yields headed higher. They got a little bit of a relief there, but otherwise we're still in that high interest rate environment. If we go to the sector breakdown here, every single sector was higher on the day. Financials led the way, 3.3%. Energy stocks, 2.6%. They're likely going to keep their rally going there until oil takes a break. Tech came in third place there, and consumer staples with a much-needed rally. They fell apart the other day. If you look at consumer staples, that was your worst performer last week. Worst performing sector. The consumer staples sector lost 8.12% in 1 week. And you can probably guess what day that happened on by that large red candle there. Other than that, consumer staples had been really, really strong, where everybody had been piling money. Go for the sort of recession-proof type stuff. Well, that for the moment is not paying off. It was pretty nasty last week. Consumer discretionary is a little bit more understandable to see the weakness there. It lost 7.8% last week. Those were your 2 worst performers. Your best performer last week was XLE, which also happens to be up 1,000,000% for the year. So that train just keeps on going there. And healthcare was your second best performer. I've been mentioning it over the past couple weeks. You have to be a little bit picky, but the healthcare sector, there's some stocks waking up there, and just kind of look at everything. You just keep noticing some of those healthcare stocks getting stronger and stronger. Utilities, there you go, comes in third place for last week's performance there with about a 0.5% gain, and everything else was pretty much down about 1% or 3%. There was really no in between. You were either down 1 or 3, and so that's how that one kind of went. Yeah, that's all I got there. New highs and lows for the day. What do we have? Not much. Actually, you got 4 and 7. So 4 new highs, 7 new lows. The new highs today were basically energy and Merck. A little bit like last week, right? So energy names, you got, what's going on today, man? ConocoPhillips breaking a new highs after somewhat of a consolidation there, near highs. Got Marathon Petroleum also hitting new highs, but reverse course. It's not extended. It just feels a little tired here. So it's not one of those that's really, taken off and you got to say is really extended, but I don't know that I'd be chasing that one. Carnival hitting new lows, well, and for that matter, Royal Caribbean as well. Royal Caribbean is more oversold. They are also going to be and still are spending money on Coco Cay. Well deserved spending, by the way. If you've never been to Coco Cay, we happened to go the July before COVID. I don't know why, but that was just when we went, and that is a phenomenal place. Worth every penny, and I don't know how many pennies it cost, but what a good time. Anyways, they're expanding that and spending more money there, and good for them. It's working. They should. Carnival's playing catch up with a little bit of their action, but it's they're years down the road. Also, Etsy hit new lows. Anything that was already substantially weak pretty much stayed that way today. So it wasn't everything moving higher for the day. All right, stocks in the news, then we'll take your questions, because other than that, there really wasn't like big economic news, big global news. I mean, I already said everything that's out there. It was just kind of a, hey, why is the market moving higher? I don't know, just get in. That was kind of the vibe today. Broadcom in the news because, well, they're looking to buy VMware. It'll be a cash and stock offering there. Comes out to about $60 billion. We should find out the details of that on Thursday. Yeah, Thursday. Apple, the Wall Street Journal actually started with the comments this morning, said that they're trying to expand China production, which is different than what the Nikkei said. Nikkei is always bearish on Apple. I don't know what their deal is, but the Wall Street Journal says, no, they're looking to expand production out of China, and I don't know if that's good news or bad news, but the market took it as good news today. Pfizer, they're looking for their COVID shot there for kids that are 6 months to 5 years. COVID vaccine effective rate about 80% in the young children there, and they want to get that thing going out there, and I don't blame them. Get it out there. Yeah, why not? They're already making tons there. Oh, I already did it. Abbott Labs. These are the guys with the baby formula thing. Like, I didn't even catch this, but apparently there's no baby formula out there. Just for fun, I was at the store here, local store the other day, and I walked down the diaper section just to see. There's lots of baby formula there, so I'm not sure what happened. If you need baby formula, you just come on down here. We got plenty for you. Anyways, the CEO said that plant that makes the baby formula should be open in early June. We talked about this last week. They're sort of monitored reopening. That was going to take a couple weeks. This seems like old news to me. We already talked about it. And Tesla, they've had some issues in China, right? Because China shut down, and so they're looking to get back to that sort of recent shutdown capacity, output, production, whatever you want to say there, by tomorrow. So they don't mess around there. It's not like, we're going to need 2 weeks, guys. No, tomorrow. We're just going to take care of it tomorrow. Speaking of tomorrow, you've got earnings from retailers. It's retail earnings season. Go back to last week's closing beat if you're interested in learning more about how all that works and what's coming up. You have got Best Buy, AutoZone, Abercrombie & Fitch, which is still a thing, Ralph Lauren, Intuit, Nordstrom, Toll Brothers, and Urban Outfitters that are going to be reporting tomorrow. Nordstrom has the worst, it looks like. We've got 6 of the last earnings reports the day after turned out to be negative. Best Buy would come in second place with AutoZone as well. That's a tie. Three of the last eight, only three of the last eight were positive. Same with AutoZone. And Abercrombie and Fitch, Intuit ranks as the best. They beat on earnings 85% of the time, and it's up 6 of the last 8, if you're into that kind of stuff there. All right. I'll take your questions if you have any. Otherwise, that's it. Like there's no way to make today seem kind of fancy or share something that maybe you didn't know, because nothing really happened other than we went higher, which is fine. Even gold went higher today, a little bit. Retailers are the weak spot. They're kind of the choppy spot for the moment. And you know why. They got earnings coming out left and right. And the dollar, by the way, finally the dollar pulling back. Right? While I wait, let the questions load up. Finally getting a weaker dollar there. That's been like that, or it's been strong for a while. Yep. More retail reporting bet is more inflation, expecting a red day tomorrow. So you thinking a carryover from last week where all the retailers basically said, yep, inflation's tough, whether we pass that on to clients or not, or customers like Home Depot was able to do, and Lowe's is a different story. But yeah, you're probably right. You like the help there? Always happy to help, Joe. Yeah. I'm getting about 97 cents per year based on the mile. If you look at it that way, I'm getting a steal, right? Yeah. I just can't look at it that way. So I'm going to start riding a bike soon, man. I'm not letting that gas mess with me, man. Keeping my dough straight. You believe that a potential recession has been priced in going forward? I think we're going to find that it ends up being a recession. We've got some time until the next GDP number, but I think we're going to end up finding. I don't see how you make that number comes in positive at the moment. So whether it's priced in or not, I don't know. You know, you can look at the Fed's recession probability index, and it's never right. It's never been close to 50% accurate. It's always much worse than that. And they're saying no chance of a recession. So it's like, okay, so if that thing's never been right and it's saying there's no chance of a recession, yeah, let's just get it over with. Yeah. Now, with such a strong day today, what do you expect tomorrow? We just did that last week, the all and nothing day, right? So we had an all down day. The next day, next to nothing. Although it did rally at the end of the day on Friday, still kind of a nothing day compared to the day before. Today was the exact opposite. A really strong day to the upside. You expect a little bit of nothing tomorrow. So I hope that's wrong, but that is kind of how things go. So do we expect that Zoom retraces? Why? Right? So J-Dub, I don't see why there would be a magic move. The expected move, right, because of earnings coming out there, the expected move is about $20. So you're saying, hey, they come out with earnings and this thing goes maybe $110, somewhere in there. I don't know what kind of news they're going to have to come out with to say that, you know? What are they going to do? Did everybody go back to using Zoom or something? Plus, if it does, if you have this big up day, maybe $10, $20 or something, who wouldn't sell into that? Think about all the money that's lost in here. So that'd be one that if you were trying to, earnings plays are fun, but if you're trying to guess that, I would overthink that one. Yeah. Hey, do you think small cap value will outperform? Expect tomorrow's flat or nothing. I do think small cap value will not outperform. I think it'll perform in line with growth. There's no reason to believe otherwise for the moment. And that's largely because when people decide to go back into small caps, they're just going to grab everything. The fastest way to get back in the market is through the index, and people do that. Yeah. Chris is saying, nope, that's it, man. Tomorrow, I'll tell you what. You enjoy these gains while you can, because we're falling 5% tomorrow. Wouldn't put it past the market. Yeah, that is the world we're living in, man. Jaron says, what's up? Thoughts on energy sector through the summer and the rest of the year? I'd have a hard time with it. I want to be excited about it, but you've got a sector that where are we at here? So year to date, 52%. I mean, I have no problem holding, but starting something new there after being up 52%, I've never been good at that. I don't like that. Oh, Zoom already came out with earnings. Well, look at that. Yeah, there you go. So it's already falling apart there. So that wasn't on my list. Let's see what happens here. Wow. 90, 96, 97, 94. Ew. Well, there you go. Swamp Rat bought the VIX. You bought the VIX today. All right, so you look at that and you think there's more volatility to come, even more after all we've seen so far. I think there's more. I've heard a few people that have been really bearish from this point. Not like I've been bearish all year. From this point, they're now extremely bearish. That puts you into some pretty nasty territory there. So I hope you're wrong, but I mean, I'll take a little more downside. But the kind of move you'd need to get a good pop on the VIX, I hope we don't get that. Yeah. All right, that's my cue. We'll get it done here. Wrap up for the day. We'll be back tomorrow to do it all over again, and maybe I'll shave. I don't know. Enjoy the rest of your day, and thanks for hanging out with us. Adios.